Okay, we are live. All right. So, welcome. So, welcome to today's session. So, today we're going to talk about me and Lily. We're going to talk about how to potentially 50 times your cryptocurrency trading. And Lily will be sharing about her options strategy. Okay, so let's dive into it. So also, just a disclaimer: for whatever we share is only for education and demonstration purpose. So please do your own diligence before you do. If you don't just follow what we say. Please do your own due diligence and research. Okay, so let's get started. Okay, so can someone help me share my screen? All right. So today, so I'm going to talk about a little bit about myself. Some of you know me already, some of you don't. So I'm the safe investor. I always use a very safe method to invest. So that's my philosophy. I've also hosted. I have lessons and courses. I've had people attend my courses and really benefited from my courses. I'm the author of the Investor Sharing Gun. This is a book to teach you how to profit from the stock market very, very safely. So this is the Amazon bestseller book. Also, I've been to Buffett Online School to learn how Warren Buffett invests, and I've been hosting a lot of events with Leslie. Okay, so now before we dive into it, we need to know what you're really doing before you're investing, right? So you have the mindset at the bottom, you have the valuation at the bottom, you have technical analysis at the very very top. So if you build your way from the bottom to the top, then you will know how to invest properly. Okay, so now before I dive into this 50x trading strategy, well, it's not. It's a tool, not a strategy. It's a 50x trading tool. We need to know that when we talk about investing, usually, generally, it means that you would want to do something like follow the S&P 500, follow the Nasdaq 100 QQ, or buy the Dow Jones DIA, and wait for a big drop. You buy into it, and then you leave it, and you don't touch it. You don't do a lot of guessing the top and catching the bottom. So that follows the low risk investing strategy. So you buy and hold, and you don't do anything. So that's the investing mindset. Now, whereas trading is a little bit different. Trading is you're trying to guess where the bottom is, and also you're trying to guess where the top is. You're looking at trends, you're looking at technical analysis, and all that stuff. Now, betting is more into the leverage side. Okay, so when we talk about the topic about leveraging today is more onto the betting side. So we have to know that this is the high risk, high return thing that I'm about to teach you today. Okay, so it's very very simple. So like what Leslie mentioned before, when we want to trade cryptocurrency, we always want to go for the high market cap one. So for example, Bitcoin, Ethereum, Cardano, and Solana, and Binance Coin and Tether. These are stable coins, so I'm going to count them out. So Cardano and Solana and Ethereum right now. So these are the coins that you will want to use your boosters on. Okay, but now how can you trade these coins in a very very safe way, right? So let's say for example, if you look at the chart right now, if you look at Ethereum right now, you can see that Ethereum is actually pretty high at the moment. So if you're not sure, even with the help of technical analysis, you're not sure if it's going to break this new high. You know, there's no news indicating that it's going to go up or it's going to go down. So this is why Ethereum has been hovering around this point right now. So, however, if you do remember how Leslie mentioned in a lot of his videos, he said that you can use this tool called the Bollinger Band to kind of guess where the market is going, right? So right now, this hasn't reached the bottom right here. This hasn't touched this bottom. You can see the middle thing line going up still. So maybe, just maybe, this is in an uptrend. Right, so just maybe. But however, right now it's kind of in a very very high point right now. So right now it's a time for you to be careful. Okay, so now how to use this tool to help you boost your strategy. So I have been talking about this trading platform I have been using for 6 months already. I've been testing this out, and I think this is very very useful. So I'm going to show you what my strategy is. So this is called UHodler. If you This is basically it's a very very good platform. I've been testing this out for 6 months, And why I chose to use this is because it has all the functions inside. Okay, so USDC. So here's my strategy. It's a very, very simple strategy. um, I deposited some USDC coins in here, and as you can see right here, I have been gaining a lot of good interest weekly, and the interest rate doesn't fluctuate. So what you will be getting is a 12% interest rate for just depositing your USDC coins or your stable coins onto this platform. Okay, so they pay you a weekly interest. So this is what I've been getting. I haven't been trading any Ethereums. I haven't been trading in the Cardanos. I've been just depositing right now. So now these are interest they pay me. Okay, so you can see here that's my interest. So that's the test money that I have put up in here. So that's right now. This is my real USDC coins. Now, if you want to use the booster, right? So let's say, for example, just for example, if I look at Cardano ADA, this one. So let's say if I look at this and I think, maybe this is going to go up, just maybe, right? So there are two ways you can profit from this. So as you can see right here, I'm earning about 20 US dollars per week, right? So the first thing that I can do is I can buy Cardano coins. So right here, I can buy it. It's very, very simple. So let's say if I want to buy this, I just need to do convert exchange. I'm converting my USDC coins. So let's say, there is a minimum. So for example, I want to test if I can do this. I want to trade one USDC coin for Cardano, and it wouldn't allow me. So there is a minimal, which is 65 US dollars right here. So it's a very, very simple thing to use. So there you go. Once you've click the convert to ADA Cardano, then you will have Cardano's deposited in your crypto wallet. Now, also they pay interest on Cardano, which is 6%, and Ethereum they pay a 5.5%. And also, if you have a lot of Bitcoin, they also pay Bitcoin 4.8%. Okay, now just want to say that some of the platforms, these interest rates are fluctuating depending on the supply and demand, whereas this platform for stable coins, it's always fixed at 12%. And this is what I like about it, and I don't have to lock up my funds. Okay, now how do you use turbocharge, or your how do you use to boost your return? So let's just say, for example, I like Cardano right now. I've bought a few Cardanos. I'm getting this interest rate at 6%, but then somehow I don't want to. I think maybe, like, for me, maybe $64 maybe is a very high risk for me. Okay, because I want to always that's the minimum I have to spend, right? So how can I just trade Cardano and just guess the price movement? Okay, so I'm going here. I'm moving into trading and betting a little bit. So how can I do this? Now, there is a function called multi-huddle. It's kind of like the Binance leverage. Well, I mean, all leverages are the same. So what you need to do is, what the platform will do is, um, it will put down some money as collateral, and then use that money to borrow money out, and use that borrowed money to put down as collateral, and then use that money to borrow more money out. Okay, so that's called the chain. So just for example, I'm going to show you. Let's say if I want to trade Cardano. So you have to go to multi-huddle. If you don't have an account, I'll post a link later. Go to multi-huddle, and then let's go to Cardano right here, ADA, and let's say I think that is gonna go up. Let's just say I think it's gonna go up, and so right here you can choose what your collateral to put down. So you can put down your Ethereum, your Cardano. It can be anything. So let's say if I want to put down my USDC coins as my collateral. So let's say I want to try, like, see if I can do one USD. And then this is the leverage right here. Okay, so this is a leverage. Now it goes up to 50, which is, it's very, if you're very strong at technical analysis, you can multiply by 50, which is not bad, right? Which is not bad. However, I like to do it the safe way. I only like to use, like, the 2x leverage. I don't really like to use a 50, because things can go wrong, and I'm the safe investor, so I try to go on the safe side. Okay, so now you can also here you can adjust your. So this is what's going to happen. It's going to create this chain right here. You don't need to worry about that. Now the only thing that you need to consider is the rollover rate. Okay, so let me show you guys. Whenever you whenever you whenever you do leverage, right? They're all because you're borrowing money. You're borrowing money from someone. So there is always like a leverage. So there are two types of fee. So before I go into it, there's a rollover fee and there's a profit share fee. So a rollover fee means that depending on the amount of money that you borrow, you have to pay a certain interest rate to the lender. Okay. So for example, when I do this trade, whatever I put down here, there's a 0.02% per hour. Okay, so you have to calculate that a little bit before you borrow too much money. Okay, so let's just say I want to try one USDC coin. I'm pretty sure it won't allow me. So the minimum they will allow me is 21 point something something. So I'm gonna make it 22. Okay, so it's that. Okay, so it's 22 coins and 2x leverage, and that's so basically what it's going to do is it's going to use your USDC to buy Cardano, and then it's going to create this chain. So right now it's still so the percentage is 0.2 per hour, and then you can use this to leverage. So basically, um, so yeah, that's it. So that's it. Now the take profit, this one, if you want to use this leverage, right, you want to also be very sure that you want to stop your losses at about 50% right here. Okay, so that's the amount that I'm willing to lose. So for example, I put in 22 USDC dollars in here, or 22 US dollars, 22 USDC coins right here. Because this is leverage, so maybe my stop loss will be 50% right here. Then the maximum I can lose is $22. Now, however, this is a take profit right here. You can set this to, let's say, 100%. Be less than okay. Let's see, 70%. Okay, so 70%. So that's the amount that you would make. Okay, so and once that's all done, then you could click start, and then you can actually start to leverage. So basically, I'm just gonna look at this, and I'm gonna do a real trade right now. I'm gonna look at the 5-day chart, and depending on this, just by looking at this, it kind of looks like it's in a downtrend right now. Right now, it's kind of looking. You can see it's kind of like a downtrend right now, kind of. So for the purpose of demonstration, I'm gonna do a real trade. So I'm gonna pick multi hodl, and then I'm gonna find ADA, this one, and then I'm gonna bet the position to go down. Okay, hold on. It's in the hover in the middle. Let's see. Hold on. Maybe it's okay. Wait, hold on. Give me a second. So 24 hours. Oh, it looks maybe it's gonna go back up. Okay, so that's me. I'm gonna use the multiplier, which is only 2. I'm gonna use my USDCs as collateral, and then I'm gonna use the minimum amount, which is around 22. And then okay, so basically what this means is that even though you're only paying 22, but you're treating it as 44. Okay, so that's that, and make sure my stop losses and take profits are in place. So my expected loss is 100%. Actually, stop loss is 50%. Okay, hold on. When it goes down 50%. Oh, okay. Sorry, my bad. I'm going to make 100%. So 100%, then I'm going to completely stop this order, and let's make this 100%. All right. So there you have it, and then you can click start. Okay. 50, 60, whatever. Okay. That. Okay. So now you have created this thing called a multi-huddle. So what's going to happen here is that you can see in your portfolio, that's your coin. You're betting, well, I'm betting this position to go down. And you can see here. Now, these are some of my trades before. Some of them are making money, some of them lost money. So yeah, so you can actually use this. And so right now I'm losing money. So I'm just gonna quickly close the trade. And you can see that was your opening. That was your opening point, and right now the price has rebounded back. Oh, sorry, this was your opening point right here at the bottom, and right now it has rebounded back. So this run is currently right now losing money because I am losing point something money. So I'm gonna just close it, and that's it. Okay, so go back to main page. So that's that. Now, what is the barbell strategy? Now, even the UHuddler, this web page tells you about this barbell strategy. So you can put 80% of your savings, your USDCs or USDTs, in your savings account. You get a 12% yearly interest, gets paid to you weekly, and there are no lock-in times. Okay. And then it's suggesting that you can use 20% into multi-huddle, and then you can limit your risk at 50%. So that's like if you bet 100, you lose only 100. You don't. If you go more than 50%, that means that you had to put more money in. So don't go over than 50%. So always use this to 50%. That's the maximum that you can lose. And then the potential, you can create a take profit order at any percentage that you want. Okay, so that's that. Now, if you haven't registered for this platform yet, definitely check this out because it has a lot of function. It has the savings account, multi-huddle. Even you can actually put down collaterals and get loans for. I've tested this out. You can put down your USDC, your Bitcoins, your Ethereum for to get loans. Okay. This turbocharged strategy, this thing I haven't tested before, but I've tested the savings account, the multiplier, the 2x booster, the 50x booster. I've tested the loan. I haven't tested turbocharge. Okay, so if you have not registered for this one, I'm going to paste the link below, and that's it. Okay, I will paste it in the Facebook, and that's it. Back to you, Lily.
Thank you, Ken, for your valuable sharing. So on my part, I will be updating the SPY, which I shared during the FB Live session on 21st of September. Now, let me pick up my slide. Hold on, yeah. Hold on. Let me share my slide. Hold on. Is Zach going to help me share it? Is it with Zach? Zach?
Lily, I can see you. You're sharing your screen now, so you can
Okay,
start.
then I'll just pick up my slide. So
Yep.
can you see my slide now?
Yep, I can see it.
Hold on. Yep. Okay, great. Give me a minute. Let me move my mouse a bit to. Okay, right. Okay, thank you everybody. I'm not too sure how many of you have actually watched the FB Live that I had with Leslie around 21st of September. At that point in time, I was talking about the SPY stock that is to buy or to buy the stock or to actually buy a call option for the stock. So at that point in time, actually, I did show that if you buy the stock, the returns from the stock will not be as high as when we buy the call option. The profit and the return is from the buy call option is way above. If you only have $2,000 to start with. So for today, if you have watched that, this will be something like an update for you. And it goes to shows later on when I share that even with the market crash, I am able to close the position at a profit, right? So this was actually where I so-called left off the last time on FB Live. But before I proceed, right, maybe if all of you are watching, could you give us a like or a hug button, if you have actually find value in what Ken has shared, yeah, so that we can actually, and or just share it with somebody whom you think can be able to gain value from our sharing. Right. So, as I mentioned, this was where I left off at that point in time. The last slide, March 24th, when the price was at this point, let's say if you buy 5 shares, right, you have to pay about 1.9K. However, because of the profit at that point in time, we could actually enter 2 contract and pay 4.1K. So on 19th of April, when the price actually moved up again, we could actually either sell off the 5 shares and profit this 138, or percent is 7.1. Or if we were to close this the buy call position with the sell, to sell it off to buy to close the position, the profit for this transaction would be 704 or 17%. So I did mention at that point in time, for direct comparison, from the initial capital of 2,000 for buy position, buying the stock, the initial capital would be about 1.8, profit was 397, and ROI for buy stock, okay, the buying and selling of the stock was 21% from January onwards through to April. Compared to the profit from options, right? The initial investment when we did the first buy call position, it was 1.9K. And overall, the profit from January through to April was 3.1K, or a return of 165%. Now, as mentioned, right, when I was sharing at that point in time, the market was actually coming down already. And this is the chart. This is where I entered anyway, even though the market was coming down. This was actually 21st of April, right? Okay, sorry, 21st of September. Even though it was coming down, I decided to enter. And this line, it was at SMA, this moving average of 100. So I went in at this price here, and you can see that it actually trended up for a while and it dropped down until last week it started to pick up again. So actually, in buy call, in options, right, when we buy a call, normally we are worried of time decay being against us. So but somehow in SPY, this S&P 500 stock, right, although it was like 1 month ago when I opened the position, okay, when it started to trend up, the position was really still beneficial to me, because when I closed the position on 20th of October, if you see here, when I opened was September 20th, I closed was 20th October, right? That is a few days last week. You look at the premium that I had, it was actually, I had a profit of 590, or a return ROI of 29.4%. This is only for 1 month of trade. So even there was supposed to be time decay working against me, I still was able to make a profit, unlike other stock, right? So the thing is that is the reason why I mentioned why I really like S&P 500. It's because when it moves up, you can really gain a lot. And again, S&P 500 actually comprise of the recap, right? 500 large cap and mid cap US stock. And generally it has Berkshire Hathaway, Apple, Amazon, Facebook, Microsoft, Alphabet, Class A and Class C, JP Morgan, Nvidia, and Tesla. And if you look at this stock, 10 stock, right, it makes up about 30% of the basket of ETF. So 30%, they carry such heavy weight inside this ETF. So the weightage is 30%, and we know that these stocks are really, really strong stock, and they are generally moving up. That is why I really like this S&P 500, because of this strong stock and the way it is impacting the market as it generally moves up. And according to this so-called chart, right, S&P 500 over the 10 years from 2010 to 2020, the capital gain is 198% without dividend. And if you analyze it without dividend, it is 11.56% return, or with dividend is only 13.91%. However, if you realized what I shared on this option, right, just this option itself is actually way above 13.91%. As mentioned, my option that I closed is already 29.4%. And from my study in January to April, which I shared earlier, it is actually 165%. So this is really, really powerful. But again, this is what I like about SPY. If you really want to go into options, you still need to do your own due diligence and make sure that just make sure that you actually study as well and before you enter the stock. So this is my sharing for today, and I really hope that you actually enjoyed and understand why option in this case is really, really powerful. So I'm not too sure, Ken, do you have anything you want to share at this point?
Oh, thank you, Lily. Thank you. Yeah, because so today's sharing is mainly about how to boost your income. So just going back to the slide. I'm gonna share my screen. Okay, can somehow you share my screen? All right, so just going back to the screen, we will have to going back to the mindset, right? You have to really understand what you're trying to do. So, like for me, the best strategy that I have been using is basically the most simple strategy, which is you find something that's very valuable, be it Bitcoin, be it S&P 500, be it Ethereum or Cardano. I think Cardano has the potential. You always want to buy it when it's cheap, and then when something is cheap, this generally means that it has a higher potential for it to go back up. Well, basically, it has to be a valuable thing. If trash can become trasher and trasher, and it goes all the way down. But if, for example, if you're buying S&P 500, if you're buying Ethereum, buying Bitcoin, if you're buying very strong and solid companies such as Microsoft, Amazon, those companies, you buy it at a low point. You use the booster, which in stocks it's called options. In
Mm,
crypto, you can use the 50x booster, the multi huddle, or any other boosters, and
mm,
then you just hold on to it. And if the value continues to increase, that's how you make money. It's a very, very simple strategy. You find the
yes,
value, wait for the drop, you go in when
yes,
you get out. It's very, very simple strategy. Don't do too crazy things. Yep, that's it.
totally agree, Ken. Actually, for this SPY, the buy call is a really, really, really simple strategy. Like I said, go in at the support and you get out at the resistance. And
Yep.
for this SPY, yeah, it has kind of reached its resistance, at least for me, because it was crashed. And because of time decay, I decided to close as well. Even if I did not close, and let's say I closed like last night and not last week, my profit would be even higher. But I did not want to take the risk
Yep.
because of time decay, so I
Yep.
decided to close. Yeah,
Yeah.
correct.
So Lily, so you I think you entered here and then you got out when it reached the previous
Yes,
high,
yes,
right?
correct.
So and
Yes,
that's
correct.
29%. 29%.
Yes,
That's very good.
29.4%.
Hmm.
Yeah, yeah.
Yeah, yeah,
And
very
maybe
good.
for those for some of the viewers who may not really understand what is time decay, actually what time decay means is simply like let's use a milk, right? Let's say a milk. Let's say you buy a packet of milk. Versus if the milk is about to expire, the value of that packet will actually reduce. So it's similar, yeah. For time decay, when it's near expiry, the option when it's near expiry will actually decay. And that option that I open, the expiry date is in January. And like what Ken is showing here, once it reaches like a 120 and after, the expiry date will actually expedite. So the value of the option will really, really drop. Yeah. So that's why I wanted to close really soon as well. So that's my sharing. Yeah.
And it's actually for any derivative or any options or boosters, time is always against us, including this thing that I call the multi huddle. This one, there is always this rollover fee that you have to pay every hour. So when we're using any kind of boosters, there's always the time that's going against us. Okay, most of the time, most of the time. Okay, I hope this sharing is helpful. And
Yeah.
you can comment below if you have any questions. And I think that's it. Do you have anything to add, Lily?
No, at this point, not yet. Nothing else. Yeah, to add. Thank you.
Okay, thank you, everyone. I
Thank
hope this
you.
sharing is
Thank you.
helpful. And you can share this video to your friends or to people who have been losing money or who don't know about crypto trading, all that stuff. Okay, that's it for
Okay.
today.
Thank you, everybody. We hope to see you in the next FB Live.
Okay,
Bye.
bye bye. Bye bye.
Bye. Bye.